Well, the street was leaning the right way into Tesla's report, and they were leaning the wrong way into Netflix's report. We got some big price action going on in those, affecting other issues, the Magnificent Seven. If the bonds go down a point a day, then we'll be at par in 8 days. We get some Fed speak today. Maybe they'll get a little dovish. We got other earnings to cover. We got a special guest coming on at 8:35, one we haven't talked to in a while. Fari Hamzei, Hamzei Analytics. Get ready, folks. It's Thursday. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, folks, starting the day in the red, 6.5 handles, 43, 35, 75, kind of just mid-range on the session. Buck pulling back 8 cents, 106.27. As I mentioned, bonds down almost a point, 108 and 11/32. I don't know, buying the bottom of the page. I don't know if it's going to work here. Crude backing off, just can't get through 88 bucks, down 60 cents at 86.67. Gold in the red by 370 at 1964.70. Silver in the red, that sold off yesterday ahead of gold, down 6 cents at 23.03. And Bitcoin futures, they're up $265 at 28,525. Let's bring in the master of disaster, Triple D. Your head must been on a swivel after hours. I hope you did not get run over in Netflix.
No, I typically don't trade the main stocks. Like everybody thinks as a trader, if you just, ask somebody off the street, they're like, oh, you must have been trading Netflix and Tesla yesterday, like after hours. That must have been really good action. It's hard to predict those, moves. They're wild moves. They're algorithmic driven. I'm more of a pure play, sympathy play. What does it mean? What does it mean when Tesla is tanking, to $10 or more than that, $16 after hours? What does that mean? Well, one, it means the XLY is going to go down. So I'd be thinking about that right away. But it means more than that. It's like, okay, well, in all likelihood, they'll probably buy Amazon because it's a huge component in the XLY. Why is that? Well, the ETF affects Tesla down so much, something has to make up for it. So they go to the next highest component. And basically, in the XLY, it's basically half Tesla, half Amazon. It's like 22% Amazon or something, 20% Tesla. It's a dumb market, but ETF effects are real. So, I'm not sitting out there trading Tesla, but I know what the implications are. I'm understanding what those relationships are. Nobody would naturally think to buy Amazon because Tesla's down. But that's why Amazon's trading up this morning. These are the ETF effects.
Yeah, and also it's a $300-400 stock, not liquidity. You like to go to things where there's good liquidity, a little bit lower price, control the risk, right? So I hear you on that one. I just look at this XLY, and boy, that had a nice, still having a pretty good year so far, but we'll see how it trades today. But we got a
Again,
lot of earnings.
XLY. So
Yep.
it's fun. You just sometimes got to go and look under the hood. And it's something that I do trade actively. Like I trade a lot of these things. But if you just go and bring up, what are the components
Components.
here? XLY. And I think you can find a lot of this information, well, you can find lots of this information online even. But Amazon, 22% XLY, Tesla, 19%. So literally XLY is 40, what's that, 20, 40, 42%, those two stocks. So why is it that they got to buy the Amazon? Well, if the XLY isn't pricing down enough just to make up for it, then they start buying other components. We see this, on the QQQs when we have an Apple or Microsoft earnings. These are just ETF effects that are real, folks. They move stocks, and understanding these will give you a significant edge because there's nobody in the media that talks about any of this stuff. Bringing money, Mitch. There's nobody in the media that talks about any of this stuff. One, They don't understand any of it. Two, they don't believe it. They don't believe that, it's ETF effects affecting Amazon here today, but it is. Understanding those market mechanics is why I'm consistently profitable, at least in the trading account.
All right, let's get to the action today. Of course, there will be 5 Fed speakers, Dennis, today. I know that a lot of people were seeing a lot of that. And I mean, all throughout the week, there's been Fed talk. And of course, tomorrow there'll also be Fed talk. But today, 12 p.m., Fed Chairman Jerome Powell speaks. 1:20, you got Chicago Fed President Austin Goolsbee. You got at 1:30, you get Bard. At 4 o'clock, you get Bosick. 6:40, then you get Logan to speak. I mean, it's going to be all throughout the day. Now, the only question is, will they go to a little bit of some dovish tone or stay on the hawk?
I think the Fed has a serious issue. We'll get into the Tesla Netflix earnings here just in a minute, but I think this is important here. Like, let's just bring up the TLT. We're breaking down to new, how many year lows here, Joel? We like 12, 13-year lows here on the TLT.
We're well below like the financial crisis lows.
This is a serious issue here. We've lost the long end. I mean, this is the reason. If you want to know why there's so many stocks that are sitting near 52-week lows, look no farther than this. I keep thinking that it's eventually going to start to turn, but maybe I'm wrong. And maybe rates are going to go a hell of a lot higher than we think they can the long end. But right now, TLT is making new 52-week lows. I've said it for the last month. You cannot start buying stocks until you start seeing the TLT above 90. Well, it's getting a long ways away from there here. So, we continue to roll over the IWM as much as, obviously, we love Craig Johnson, and Craig Johnson has had some fantastic calls, and he thinks the IWM could be forming some type of a bottom. There is the possibility that this pattern here, where we've been in a range from 170 to 200, could potentially resolve to the downside. And that little, mini, like cup and handle I was looking at doesn't work out. I'm somewhat concerned that it is going to resolve to the downside. I'm long some IWM in the long-term portfolio. I'm long some stuff in my long-term portfolio, and it's not doing good. Anything in my long-term portfolio. Thank God I'm 55% cash, because I'll tell you, the 45% worth of stocks aren't very good. Like, because even if you're in like the NVIDIAs and stuff, or even in the tech stocks, and I've sold a lot of those, but it hadn't been good 3-4 months here, Joel, for any of those stocks either. I mean, QQQ is kind of holding on, but it feels like it's just inevitable that it's eventually going to cave. Maybe it's Tesla, maybe it's something else. QQQ, unbelievably resilient today because they're buying Netflix. But, I mean, the risks here, it's all risk reward, people. Like, the markets are all risk reward. And there's a reason, sometimes to be all in. 2020, everybody's, inflation's going wild. Everybody's buying stocks. Everybody's having free and print and money party. Rates were low. And then there's this environment where rates are not stopping going up. And I tell you, man, nothing hurts stocks more than higher interest rates. So we can look at whatever statistical data that you want to look at over the course of the last 10 years. None of it matters, because we have not had rates doing anything like this for what? 15 years, Joel? 16?
Oh, man. Yeah. Oh, boy. Maybe even longer. I mean, I can't remember. The last
figure out, how to price stocks in a 6% market environment. And that's why there's seemingly all these stocks that have a lot of debt just continue to get punished. And I mean punished. Your stock's got a lot of debt. I have a few of them in the portfolio. They're getting hammered, man. Stocks that are debt-free are holding up better, but eventually they start to come for everything here. So, not saying you got to just throw out, we'll have rallies. I think, bringing it back to your original point, bringing it full circle here, Mitch, I think the Fed speak today here. There's 5 speakers. I think it's going to come off a bit more dovish than it has in the past, because the Fed cannot afford to continue to allow long-term rates, and they can't control long-term rates. They control the short end. They don't control the long end. But they've got to, start looking at, we may have a problem if these rates, longer-term rates, start approaching 5.5%, 6%.
Oh, man.
The market's got bigger problems here. And let's continue to remember what happened back in March. What happened back in March? KRE breaking down. What happened? We lost 4 banks. What happened? Because all these banks got these mortgages. They're lending long and borrowing short. I mean, this is a major problem here. It's not like they can just turn around and start, if somebody 30 years, all of a sudden comes due, they can move that at 7. But they have some of these mortgages on the books for 25, 26 years sitting at 3%. In a 6-7% environment, they're getting killed. So I still think, and Mitch, I think you're with me. I'm going to let you talk here in a second. I think we got a regional banking problem that is, in the books. Like they got a lot of bad mortgages that are upside down on them here, costing them money.
Yep.
And eventually that's going to come out. I think it's going to come out here eventually. They can keep, like making money in other businesses and hoping that people leave their money in their deposit accounts and their checking account getting 0% to try to cover the difference. But people are getting smarter. And you start getting 6-7%. They're like, why am I getting zero in my deposit? Why am I getting zero in my checking account?
I know.
Well, you know what? People start moving money out of that, and then they got problems. So I just think, like with the regional banks, I think there's so many issues here. It's a scary market right now. Risk reward still doesn't set up to just go and blindly buy stocks.
I agree. And I think that's something definitely to be looking at. We'll talk a little bit more about the banking situation as it keeps kind of developing. Now, one of the biggest things that I will be looking at is things like this. I'll show you guys a quick little image of some things that I'm working on in the background here. But just to kind of give you guys a perspective of things that I'm really kind of focusing on. So a lot of what I think we need to be focusing on in the regional bank concern is, of course, with commercial real estate. And so I'm going to give you guys a little sneak peek of one of the graphs that I'm working on from my big report. And so here you guys see what? You guys are going to see what has commercial real estate significant loan kind of exposure. So what do you see here? Banks with lower than 250 billion in assets have 55.5% of the exposure. The smallest banks have the biggest exposure in the commercial real estate game. And why?
And we aren't even talking commercial. I mean, we're being nice talking residential mortgages. A commercial
I don't think
real
that's
estate,
the problem,
which we said
Dennis.
2 days ago, is way worse situation. Because they got a lot of empty buildings and these office buildings and stuff. Like, I don't know, Mitch.
This is the big thing.
People keep saying, what are you buying? Every time I go down, what are you buying? I'm like, I haven't bought a stock in a long-term portfolio in a month.
Long time.
Not one. I'm sitting with 55% cash, and I don't know. Maybe we're getting near the bottom because I don't even feel like selling. I feel like I keep feeling like every time we rally to sell it all. Like go 100% cash in the long-term portfolio. And then that's never prudent. Because it seems like, everything shall pass. But, what do we say? If SPY got up to 440, I think I'm going to sell it all. I didn't do it, obviously. But 438 we got to, and boom. Now we're right back down here mid-range. I just don't think all these problems that you're highlighting, Mitch, are just going to go away magically. Especially if the Fed loses control of the long end, because the long end is following the short end. And yes, if the Fed starts getting dovish and starts cutting rates, you got to think the long end's going to start coming down then. So maybe they can control it indirectly. But, I mean, just imagine the scenario where rates continue to go up and the Fed starts lowering rates and the long-term rates don't start coming down. And then you're like, well, now what? Fed? Now what? That's a bad scenario. And that's what you hope doesn't happen.
All right, but just to kind of state the point, the chat wanted to hear a little bit more.
Yeah.
So what I want to state there is necessarily, I don't see the issues in the residential real estate because of the situations with supply. There's some underworking there that I'll tell you the truth. I don't see the trouble coming in that space. I think it'll take a lot longer for trouble to get in that space because you'll need an oversupply of construction to come in. That can take years to come in. Now, where the commercial real estate issues are is because these loans are coming around, and there's a lot of loans that will be coming around in 24. And so that's a lot of what my report comes into. I'm not going to go too much into the details, but if you guys want to do the research on that, I'd advise you guys definitely take a look into it. There's a lot of opportunity there if you do the deep dive research. All right, let's get to the stocks today. There's so much to talk about. Netflix kicking off. Let's look at Q3 EPS here. $3.73 beats the $3.49 estimate. Sales of $8.54 billion beat the $8.53 billion estimate. Netflix sees Q4 23 revenues at $8.692 million versus an $8.77 billion estimate, and also sees the Q4 EPS at $2.15 versus the in line with $2.15. They updated their fiscal year 23 operating margin guidance to 20%, the high end of the prior range, which was 18 to 20%. They included here 8.7 million global streaming paid net additions. This growth is attributed to the global password sharing crackdown. I know Dennis has been talking a lot about that, and the introduction of advertising supported tier at a lower cost. Netflix is forecasting for the subscriber growth in the next quarter will be similar in the second quarter. We're increasing our focus on revenue as our primary top line metric, Netflix wrote in its 22 third quarter earnings. They also wrote that this will become particularly important heading into 2023 and heading into 24 as we develop new revenue streams like advertising and paid sharing, where membership just becomes one component of our revenue growth.
Wow, what a pop here. I mean, and we looked at the chart on the closing print yesterday, and it just looks so bad, Everyone leaning short into the
Everyone
report.
wrong.
Yeah, someone's asked me, like, is it going to stop at 400? I mean, how many times? I mean, I'll just give you that right now. There's a bid at 390. So I don't know who, what, or why. You lose that bid at 390. You got some room on the downside. On the other, it's been a nice little range here, 390 to 395. The pre-market high comes in at 95 and a half. You have 3 daily highs in this 395 to 400 area. I think, the first, 48 points were pretty easy. Let's see if it thickens up here between 395 and 400. But man, it's just, you tried to call top and Lululemon off the news, and look what it did. So boom, boom. We'll see.
3-day rule, Joel, on a lot
Yeah,
of this stuff. I mean, Karen Feinerman says it all the time. She's got a good point. It's like they come in, they buy it, then people are excited, oh, it's up, and then they buy it. There's follow through sometimes because it's just Johnny come latelys, upgrades happening today. I mean, what happens though is eventually, like after 2 or 3 days, you get buyer exhaustion, and then there's just no other buyers.
yeah. You wait for
So
the volume.
like
I mean,
Lululemon, look at what it did yesterday. I mean,
yeah,
2 days, 420, and starts to come down. I think Lulu will be back in the 380 range in a couple of months, a month or something. It just comes back. The S&P
weak.
pops
Yep.
usually do eventually fade. It's just not a good idea to fade them on day one. So same thing. Am I fade Netflix on day one? Probably not. But do I think Netflix is going to be a buy at 394? Definitely not. Do I think Netflix is going to be back at 350 sometime in the next few months? Yeah, because we're in a bear market, and people keep saying, oh, we're in a bull market. We're not. Maybe there's a select few stocks still in a bull market, but the select few stocks, they're all breaking trend now here too. Bears have been controlled since we started talking about a bear market a month and a half ago. On this show, we don't care what we've done in the past. We care what we're doing in the future, and we try to predict. And on this show, Money Mitch, me and you, and Joel's kind of been on the fence, but he's leaning more bearish here now. We've been talking about being bearish in stocks here for a month, and we have been absolutely correct. So, few things wrong. TLT, I keep thinking it's going to bottom. Not. I might have to eat the loss on this thing. I'm down $4 in it now. Might just eat the loss because I can't have rates just continuing to do this. It's doing something that I didn't think was possible. I didn't think it's just continue to. Let's see what Fed speak does today.
Yeah,
Let's see if
that'd be
Fed
interesting to see.
can be somewhat dovish and give a lift, maybe. But if the Fed just plays tough here again, the market wants dovishness. I hope that they're not going to come out just, we got to continue to fight the good fight. Because you know what? The fight has already, again, labor inflation is going to be the sticky point here now. And inflation is going to be hard to beat. But you can't continue to ignore what long-term rates are doing, Fed. You got to start eventually at least commenting on it because what they're doing is unprecedented. The wealth that has been lost in the bond market, Joel. I mean,
incredible.
This is some of the biggest falls that we have seen in the bond market ever. I mean, you think about your 60-40 portfolios and stuff that are sometimes, depending on your age, sometimes 60% bonds. They've just been absolutely assassinated. I mean, we don't give it enough credit, but the TLT we look at because it's traded and most bonds are not traded out there. They all look the same. The TLT is an indicator of what the bond market looks like. The money in the bond market is trillions and trillions and trillions of dollars. And there's just been a lot of money lost here, like a pile of money lost. So I just think it's eventually got repercussions here too. It's hard to just come in and say, yeah, this is the bottom. I'm buying stocks and we're going back to all-time highs. Maybe someday, but I don't think all-time highs are coming anytime soon.
How are the preferreds? I'm looking at the PFF here. I know you've used that for an indicator over the years.
Yeah.
I remember, you talked about putting that on as a huge head of you, as a hedge. If you've been keeping an eye on the
We talked
preferred
about it a few
markets,
days ago. We've talked about being short this thing. Like we had the person who was on CNBC saying this is a great opportunity, and I was tweeting out, yeah, you're not paying attention here because the PFF, full of regional bank preferreds, giving you 7%. I get 5.5% risk free. Pay me 1.7% to take on all that risk. No, thank you, man. No, thank you. 7.4% is awesome in a 1% environment. In a 5.5% risk-free
horrible.
environment, you only give them a 1.7% premium to buy all these regional bank preferreds? No way. Not enough. I'd rather own the bank preferreds or the regional banks almost straight up than the PFF because at least it's a better risk-reward setup. So, no, I think the PFF's in trouble. That's why it continues to go down here. People are like, well, why does it keep going down at 7.39%? Lift under the hood and look what's in there. It's all banks.
Yeah, it's getting in that. That's getting in a really open area. A little bit of a bearish talk here. A little bit of a rally going on. Trying to get back unchanged here
Lots.
on this
And
session.
again, I think I'm not saying today I'm throwing in the towel and it's over here and we got to sell stocks. We're selling rips, folks. We're fading. 2 days ago, I was tweeting out, we're up, we're down, we're up, we're down, we're up, we're down. I had a bad down day
Can't put a
yesterday. Did we get
streak
a
together.
relief pop today, maybe Fed induced? I think it's possible. But I mean, there's so many opportunities to just sell the rip. So, and if you're 100%, invested in this market, sell some rips. That's what I think you should be doing. Selling into strength. You can still buy into weakness as a trader. There is opportunities. The trading has been okay. Money Mitch, what are you trading over there?
Honestly, I'll be as honest as I can be. It's been a tough market. I right now only have one swing trade short. That's MTB bank, but I'm looking to take the money and run in just a little bit here. That was just kind of more of a earnings reversal here that I
Oh, that's a good
expected.
call.
But we'll see what happens there. That's just a regional bank to have some exposure to the play that I'm looking for. But I can tell you guys right now, there's very few times where I feel like I don't have edge right now in this market. And it's been tough because I've been seeing a lot of range moves to the bottom, big wicks like you saw, like Netflix action yesterday. It started to look really nice there, and then just boom, came in and they hammered it. So I can tell you right now, there's very few times that I feel like I have no edge right now. It's very slim edge. The only thing I've been seeing is kind of the XRT type of trade, but that took a step back yesterday.
But you short stocks here too, and like we never
Yes,
talk swing trades on the short side. And I mean, I typically swing long. I day trade short all the time, but a lot of it's hedging, a lot of it's
like
doing
that.
some different things. Not a lot of directional bets on the short side, but I mean, there's been some good trades on the short side. I'm just selling some reps, like the Microsoft the other day on the ridiculous headline from Business Insider. All the way up to the 336, gets up to 335. Another selling opportunity. So full disclosure, I'm short Microsoft day trading portfolio, but I mean, just another selling opportunity. So I think we got to just look at the kind of market we're in. Don't get like, again, you hear me, you think like, oh, the end of the world is coming. It's not imminent. The end of the world is not coming, but it's all risk reward. From a long-term investor hat, you got to analyze risk and you got to analyze reward. That's why I look at the PFF and I think the reward sucks. 1.7% over the risk-free rate to buy a bunch of regional bank preferreds that some of these might actually not even survive. That risk sucks. So PFF, horrible risk reward. One of the worst risk rewards in the market. Johnson and Johnson, when it was up at 175, I was like, this is one of the worst risk reward setups ever. The thing's trading 21 times earnings, got a bunch of lawsuits, billions of dollars in lawsuits coming at them, and it's a consumer staple, and consumer staples are starting to get crushed. That was a good setup. There's different setups for different markets here, but you look at Apple and you think, yeah, 180 popped up there. That was a good setup. We called down the show saying shorted around
Filled
180,
the gap too there.
back through
Filled the gap.
175. But Apple
Yep.
has something working in its favor, so it's not as
No
clean
debt.
as some of these other stuff. Very little debt. Very little debt. People say, oh, it's got billions of dollars in debt. What are you talking about? That's relative to market cap. It's nothing. They basically have
At
no
state,
debt
yeah,
relative to
they
market
could
cap. It's a
they could
drop in
go
the
to the
bucket.
till at one of their
Yeah, they go to
stores
the
and
till at
get.
one of the stores and hand out and pay off the debt.
But
Exactly.
if you look
So
at, I mean, I know we like the IWM looks horrible, right? There's no doubt
horrible.
about that.
Mm-hmm.
You hang out near the lows too long, you eventually take them out, right? I mean, that's just,
Which way
you
do you
know,
think it's resolving?
I mean, I
Down here
tell you right
too
now,
long, Joel. You just said
yeah,
it.
it's been down here too long. But I'll tell you right now, I mean, I look at this triple Q chart, and I'm not, of course, I'm not bringing in any geopolitical factors in this, which is a whole nother can of worms, and we could talk about that later. But just being objective here and rates or whatever, you look for the triple Qs. I mean, until we breach 350. I mean, on the monthly, I think the Bulls are still, and I know that's 14 handles or 14 points away, but it's just amazing to me that, and these stocks and these people have flocked to, but you do have monthly lower highs, right? Which is not good coming down, but no exact number at 350 there, but man, the longer this, I mean, it's 13, 14 points away. Now you get a miss out of one of the magnificent seven, then boom, you
Yeah.
have a chance. But just look at, all the bearish talk, yeah, IWM. There's a lot of stocks getting killed out there, and it's hard because you have to differentiate. But man, oh man, I mean, just the run that it's had this year, and for that to be holding up. Now you can look at the IWM and the exact opposite. I know Craig. We talked to him yesterday, and he's looking for a reversal, but I just until this rate situation that the small caps and companies
The
with
small
debt. I
caps are
mean,
no touch until the
yeah,
TLT can start to sustain a rally here. QQQ is still a hiding spot for so many people. And
yep,
again, it's because these companies have low debt. I mean, the half of QQQ is a magnificent seven. And we went through this exercise
Mm-hmm.
already multiple times on this show over the last few weeks. And there's no debt. There's very little debt.
Well, let's go to one of those
that's why they hold
leaders.
up.
Let's go to one of those leaders.
Go.
Tesla, of course, like the chat said, taken out to the woodshed. Tesla Q3 adjusted EPS 66 cents, missing the 73-cent estimate. Sales of 23.35 billion, missing the 24.38 billion estimate. Tesla reported Q3 earnings below the expectations here. During the earnings call, CEO Elon Musk expressed caution about the global economy and highlighted the company's focus on making their cars more affordable, talking about things like if interest rates stay this high, then the demand would probably be heading towards the downside. So that the Fed would need to change tune to kind of save the economy here. Musk also talked about, of course, the Cybertruck production that remains on track for later this year, with first deliveries scheduled for November 30th at Giga Texas. There is going to be a delivery event, so stay tuned for that, November 30th. Tesla is working on the Cybertruck, but Musk cautioned that it would take 12 to 18 months to achieve a significant positive cash flow and emphasize the need to manage expectations regarding the vehicle's financial performance. Why? The margins, of course, total operating margins dropped significantly to 7.6% from the previous year's figure of 17.2%. That's a big drop there, guys. And I've been talking about that. This is what the auto manufacturers have come to. It's no longer the battle of having EVs versus not having EVs. It's the battle of the margins.
How many people just put the $100 down deposit to reserve the Cybertruck and have absolutely no intentions of ever buying it? Because I had a buddy, good friend of mine, talking with him last night. We were just talking about the Cybertruck. He's like, yeah, I put the $100 down. I was like, you going to buy it? He's like, hell no. How many other people did that? Like, are they counting? Like, do they honestly think that every $100 deposit is going to turn into a $60,000 or $75,000 sale? Do you think that's going to happen? Mitch, Joel, what do you
so
guys think?
ugly,
Chat,
so
what do you think?
ugly.
If anybody in the chat, ask the chat.
Yeah.
Anybody put the $100 deposit down, and do you guys fully intend to buy the actual truck? Because I think there's a lot of people who put the $100 down just to put the $100 down and be in the queue and have no intentions at all of actually buying the truck.
Yeah, I mean, the big thing also is that, it's not the same situation as it was probably when they put in that reservation, right? Things were looking a lot rosier. And now I don't know. And I think that a clear example is Musk cautioning you guys regarding the vehicle's financial performance because they're losing money on these vehicles. I think that's exactly what's going on here. The same way that Ford is losing on the Lightning, right? I mean, let's just be honest. The margins aren't good in the EV game.
Jobless
This
claims
stock
just
was
came
getting
out here
hit.
too.
Yeah,
Not
stock
not
got
moving
hit
much.
going in. Yeah, it's
Jobless
quiet here.
claims
Yeah,
198,000 versus a 212,000 expectation, prior 209. Nothing really on that tape. I mean,
yeah.
there could be reactions, but to tell you the truth,
Rallying here a little bit, coming up to the highs of the
Yep.
pre-market session,
I'll give you the number I think
48.75.
that matters here. I think it's the Philadelphia Fed Manufacturing Index coming in at a -9 versus a -6.4 estimate, prior being -13.5. The jobless claims was, I think, pretty much what we've been seeing.
Just going to the Tesla price action real quick before we move on.
Yeah.
Trading at the lows of the pre-market session, 224 and a quarter. Potential support there. You got a little gap to fill here. If you're looking for more on the downside, 220.58 was a daily low, and then you got a gap to fill at 17.56. But this is Tesla, right? And it's just like Nvidia, even on its worst days, it has 10,
Underneath
15,
demand.
20, yeah, huge rallies here. So
There will be. I
there
mean, the
will be. I don't
Magnificent
know.
Seven
Yeah.
just has underneath demand below it. So it's hard to just go rah full bearish here. It seems like you always get a shot. Even Nvidia, remember, down to 423, then rallied to 443, then
Yep.
back down to 423. You get shots to get out of this thing. So it's like a stock that doesn't seem like you need to ever sell in the hole. That tomorrow or later on today, you get another shot where the thing's up $10, sell into the rips. If you really want out of Tesla, sell into the rips. Again, there's no debt here. So, I mean, it's positioned a lot better than Ford and GM. It's positioned a lot better than a lot of other companies out there that are in the IWM and, smaller caps that are very reliant on capital. Again, we know that they have the financing arm, that's, really drives the debt for GM and Ford and for Toyota and all of them, where Tesla's financing arm, which is there, is not nearly the size of those. So it's a little bit, not all just, operational debt, but at the same time, Tesla's just done a really good job of managing that debt. And they're getting paid for it right now. That's why the stock holds up really well.
I think you got a date with 200 coming. That'd be 50% retracement of that recent rally to 300. So that's what I'll be leaning. I'm on the bearish side here on
selling
Tesla.
reps. But you're on the bearish side. So I'm going to just bring this up here one more time. You're on the bearish side. Would you sell it down $17 today, or
no,
would you
that
pick
doesn't
your
make
spot?
sense, right? That doesn't make sense.
There you go.
That doesn't make sense. Like always, guys, that's chasing the trade, right?
Yeah.
And in this market, the way that we've been seeing these range-bound moves go from the bottom all the way back up, that's an easy way to get wrecked in this market. It's been the max pain trade on both sides a lot of the times.
Chasing.
That's the chasers, right? When you chase, that's how they wreck you.
Chasing usually doesn't work in most markets. It worked in 2020 and everybody learned a lot of bad lessons. Chasing typically does not work. David Portnoy throwing the darts and just, are chasing and buying this because it's going up. What's up the most? That's what I'm buying because that's going to go up more tomorrow. Doesn't work typically. That typically doesn't work. We are in normalized markets here now to a certain extent, not the bond market, but chasing just typically doesn't work.
Taiwan Semiconductor coming in with a nice little lift here. $1.29 beat to $1.17 estimate. Sales of $17.28 billion beat to $17.07 billion estimate. Taiwan Semiconductor expects Q4 revenue at 18.8 to 19.6 versus an 18.65 estimate. Gross margins at 51.5% to 53.5%. So operating margins also given here, 39.5% to 41.5%. TSM getting a lift here.
I have trouble
Trading it to
buying
highs.
You're not going to get me to buy anything on a rip today. Especially after I just gave the chasing conversation here. So
Yeah, where's the resistance? Maybe.
Yeah, this is a nice area if you are looking at potential resistance. You have 4-day high 92.94, 5-day high 93.44. So there's a little bit of a zone. We'll see if we can actually had another high in that area too. If in fact it can clear that, opens up to 95. But right now, trading at a couple highs from late last week, last Thursday and Friday.
American Airlines Group Q3 adjusted EPS 38 cents, beats the 25-cent estimate. Sales of 13.48 billion, missed the 13.51 billion estimate based on demand trends and the current fuel price forecast. Excluding the impact of special items, American Airlines expects its Q4 fiscal year 23 adjusted operating margin to be between 2 and 4% and approximately 7% for fiscal year 23.
Popping a little bit here.
Just the hardest stocks to be bullish. I'm long AAL still. Shouldn't have bought it. Bought it at 15. Obviously, shouldn't have bought it in the long-term portfolio. It was a half-size position, and now it's a quarter-size position because the thing keeps going down. So I'm not adding. I don't add to losers. Typically, people say should add to it. Typically, I don't do that. I have done in the past. I did it correctly with Netflix, but I'm definitely just not feeling like even yesterday. I thought the UAL had a chance. It was down 2, and I was like, I felt like
so too.
I felt like it could reverse. Me and Money Mitch, and look what happens.
Yeah.
It just continues to go down. You got rates killing it, and you got oil killing it. And then you got potential consumer demand going to kill. The airlines are in just such a bad spot looking forward here right now.
And
that's why they get
canceling flights, to the Middle
East.
Labor
Labor issues are going to be there. Like, I mean, labor costs are going to go up. People want to get paid more. The pilots, contracts. I mean, holy mackerel. The airlines have just been an absolute disaster from bliss in July to absolute piss here in October.
Just made a new high on the session here. They like those numbers. We're rallying up here, making a new high 43. Yeah, we're trying. For this, it's just a little bit, just had a little spurt there. Not at yesterday's high yet. So important to take out that 1174. And then you just got to look at this 1204 to 1210 area. 3 highs in that exact same area. So if another leg up, you get to yesterday's high. Sure, we'll see. We'll test that after that things open up on this one, but we'll see. So far, AAL trading up here. What are we trading up? We're trading up 25 cents at 11.61.
Chat
TLT has rallied $1 here from the lows here too, Joel. So TLT liking the number as well. Started rallying a little bit before that too. So keep an eye. I mean, the equity started to turn. TLT actually started to turn before the number. So that helped. That was why we started popping before the number. It was off that TLT. So you can see, slowly trying to show a little bit of life here today. It's still down 50 cents, but it was down $1.50 this morning. So trying a little bit here. That's helping the equity markets. I mean, you day traders out there, keep that TLT on your screen because it started popping a minute or two before the SPY did.
Yeah, the chat asked if I was out of that AAL trade. Yes, I got out for a 10% loss there. Probably one of my biggest losses of the year at 1250. So I got out there at 1250. I said I'd come back in, but I need to get back above 13.
I don't know if you wanted this. This is ugly.
I need to see the trend change, right? So when I get caught on moves like this, I need to see the trend change. The trend isn't changing. Just draw a trend line and wait for the day that it actually closes 2 days above that trend line, not even just 1 day. I'll wait for a 2-day close above trend line to show me a trend change in American Airlines. All right, let's get to our guest today. You guys out there, smash the like. I think you guys just might like this one. We haven't had him on for a while, and he doesn't hold back. Let's get after it.
Fari Hamzei, Hamzei Analytics, the watch commander here. I couldn't think of a better guest to bring on in the current environment. Fari, how you doing?
I'm good, sir. How are you?
Good. You seem pretty subdued today.
Give him a minute.
It's no, it's just a wild trading last few weeks, and I got a boss to report to, Admiral Tico, and it's just too much. I'm glad it's Thursday. You know what? When it's Thursday, there's only one day to get to Thank God it's Friday, so we're close.
Wage inflation. Ask for more, Watch Commander.
Yeah, Captain Tico got to pay you more. You got higher bills.
Well, Tico now is getting really sponsored by Jamie Dimon. He's got $112,000 line of credit from JP Morgan. What's happening to the credit market? Why does a dog get a credit rating like that? One of my LLCs in his name. Okay, so he's got an FIN. He's got a tax.
Tico, he trades, man. For real.
And so it's just incredible. The other day comes in, and it's not that we're applying. They send you pre-set go. Just say yes, and boom, $51,000. Just give me under Business Premier. Welcome to
All right, Fari. I want to ask you about your Sigma channels, because we have just had some major moves in stocks right here. And have you had to expand your Sigma channels to like Sigma 10? Because some of these moves have just been unbelievable.
I can foresee that, because I do index, and index is law of averages. And we're getting four Sigma constantly, 3 and 4 Sigma. So if the law of averages is getting 3 to 4 Sigma, you can imagine single stock, you're going to overshoot, both to the downside and upside.
So where are you at on this market? I mean, there's a lot of things going on.
We're still long. Can I share something on the screen or no?
Always.
Sure.
Always. Take over, Fari.
So what do I do? Present?
Yeah, present down there. You'll have screen options, and you'll also have window options. If you just want to share a screen, you can do that.
A screen will do. Yeah. Let me go there quickly.
No worries. I'll let you know when I see it, and then we'll get you up.
Are we good? Is this see what share window? Yeah. There we go. So we'll go into one of these charts. Not that chart. Yeah, we can put it there. Let's put it there so we don't disconnect this one. Okay, you can see something. Right?
Boom, I got you.
Okay, so now let me switch to a screen. I want to show you. That's a different desktop.
No worries. If you want to switch it, you can switch it. You might have to stop it.
We're good. We're good.
All right.
Okay, now let's go to a timer chart here. Because that's our main navigational tool in this, as Admiral Tico calls. We will prosecute this market. And the time and place of our choosing through the Colin Powell fan. You could see where we are. We got a 50 bar and we got a 200 bar. And the issue is, how do we coming out of this little micro wedge, if you will? If you imagine it, it's trying to build a wedge here slowly, okay? As 50 and 200 merge. So something like triangle. Let's see if that goes. You could see we're long. Our long has been good. We did well. We were short most of September, but that's seasonality. You got to do that. And then, excuse me. We did not make it on the top. It was weak, so it pulled back down. I'm actually debating, or do I go flat today or tomorrow? I'm going to take a pause. This has been a very good run down and a run up. PMT is at an all-time high. If I come here, this is our performance that we measure, as measured by Time to Digest, because you got to follow their routine there. There we go. This is TD. We had it posted yesterday, I believe. There you go. And you could see we've been long for 42.99 on a long SPX, and we're still there. Here's our differential. It's not the highest differential. We've been higher than that, but the performance itself, which is the green line, all-time high over, 7-8 years now. 10. This is from this is the 14th, so 9 years now. This is about 170 trades, 170. So it's not one time I got lucky or one bad call. Net is what we've done. This is the obviously pandemic drop, and this one is 2018. This is we may see something like this because of the Washington mishaps and.
So you're bullish. You're bullish on the technicals, right?
Yes, and of course, look at this. This is what I'm worried about, though. This is what I'm worried about, which is the budget. This is the budget because last time we got defunded, the government did. Remember, into Christmas Eve? That's one. Now, I go to a skew, which is the tail risk. I'm sorry. Joel, I know you got questions. I'll be right with you. Just give you a little background there. And I know I've got limited time. But you could see here also, we're not getting another signal on a move down. This is the tail risk to here, this area. The put option activity on the big index, SPX itself, the realm of big boys. They're not seeing a whoosh down yet. Okay. Now this has a little forward window, so I think this is probably going to start picking up a little bit before we get to middle of November, where the current authority runs out.
What about the war situation? Are you worried about the war escalating? Obviously, in the Middle East, now it seems like.
How do you want me to say it? First of all, let me put some cologne on so I smell good for you guys.
There you go. There you go.
Gotta do it.
Smell that. I smell that. Smells good right there.
Yeah, to put the cologne on for the war talk. Okay,
it's
give me a war talk.
It's not always about the girls. Remember that. Okay, so no, on the war, actually, Joel sent me a little note saying, "Hey, let's talk." From your background, this would be useful. Let me, for the record, my dad was very pro-Israel. At 67 war, he was in Sinai at night, delivering non-lethal through C-130s, and as a team leader, he would come in first to land. No lights, on the sand, Mossad navigator, no markings, out of Nicosia, Cyprus, and got to know General Rabin. Back then he wasn't general, but he was high up there. Maybe he was a one-star general. Rabin very well, which became the prime minister. In 73, he had a telex from him saying, Fari Hamzei's first name. We need oil. So he had to get 3 tankers into Haifa quickly, with the permission of Kissinger as the NSA at the time in Washington. Or maybe he would become Secretary of State by then, because that was second term of Nixon. Long story short, of course, a little also issues with Putin/Ukraine. It's a two-pronged approach. We got to take care of both. Obviously, civility is important, but the other side doesn't look at it. It's even war. It's going to be brutal. The plan is 2 hours. Remember what the Don Rumsfeld said. You start something, but it's not going to go by your plan. Never does. So we have to give them all the help they can. If you don't want to know the outcome. Remember, I'm from Iran. Shah would talk about this.
What are the impacts for the markets here? Do we continue to see oil rally here, or is the oil rally already priced in the war? Thoughts here on oil? Let's just talk specific commodities, because oil obviously got the spike.
Sure. Yep. Let me look at a chart quickly on oil. More recent one. Let's see.
Yeah, can you reshare that one for me?
Pardon me?
Can you just reshare the oil chart for me?
Yeah, but I'm just gonna go to Google and say, yes, I will. Crude spot price. Okay. Here's general. I'm not trying to do analytical work. I'm just trying to get an overall picture of it. Yeah. Hold on. This is this? No. Oh, okay. I'm not getting anything. So hold on one second. I used to go oilprice.com. Price of oil. Let's see. There we go. Price charts. There we go. Okay, I'm good. All right. Let me bring this over to you. There's a crude at 87. I just want to get a spot price.
Sure.
And
okay.
Yeah, it's not what I would do. Send to my stuff and double and triple check. But here where we are. Now, I think by now everything is priced in. You have to assume that. That's one. Two, I was expecting the bonds to drop a bit in yield and value. We haven't seen that. No. That's what's puzzling me. Remember, a couple of days ago, I think it was Tuesday, market rallied. Okay, market rallied, and so did the yields. The price should rally. So let me go to treasuries. I think what's really more important than anything else is this. There's an old saying in Wall Street: the smartest, and I'm not one of these guys. The smartest guy in the room, the smartest trader in the room is the bond trader. I'm no trader. Look what we have done. By the way, these are monthly support resistance levels, monthly, daily chart, daily bars posted on that. This line that you see is an all-time line.
Can you share that one more time, Fari? We just lost your screen. Share that screen one more time. because
One
I want to
second.
see what you're seeing here with the bonds.
Oh, I'm sorry. Okay, go to
It just
present.
stopped sharing. Yeah, just reshare that screen. We just lost it.
Oh, no. Okay, I restart. Okay, there we go. And window. Okay, we want to show you this one. Yes. There you go. You see the bar? You see my cursor here? There you go. You can see. Okay, this is a 91-day discount rate. Remember, discount rate. So you got to compound it 4 times to get to be like these. These are yield to maturities, so they're per annum. Okay.
Yeah.
This line here is a 7-year high. The golden rod, and look just how it's breaking into that. Look at this is a 5-year. So cars, homes, long-term liabilities. That's 30-year. So 10 and 30. Look what's happening here. This is unseen.
Not
There's
good
no-
for
What
the
does that mean
market.
for the
I don't know.
stocks? What's that mean
Yeah.
for the stocks, though? If the yields keep going up, if bond yields keep going up and bond prices keep going
All
down,
assets have to be repriced. This is Econ 101. Or
that's a
NBA
problem.
101.
Yep,
Yeah, the assets
CFA
have to
had
be repriced. Yeah. I don't want
repricing
to
of
be long here.
assets.
I'm on the tail end of a long. I'm on the cover, and then because of a skew is telling me, plus what I know about Washington, what a mess that is. We should have a pullback into Thanksgiving and into
Okay.
All
right, Fari.
Thanksgiving.
I'm sorry,
Thanksgiving
we're up
to
against the clock here, Fari. We got to get a few more stocks in. Fari Hamzei Analytics joining us here on Premarket Prep. Fari, we'll dial you up again soon. Watch Commander. We appreciate your input on the markets. Have
Yes,
a good
sir.
day, Fari. Say hello to Captain Tico for me.
It's Admiral Tico. Admiral.
Oh, Admiral, he got
Remember,
promoted.
we salute the rank, not the man.
Okay. All right. Thanks, Fari.
Thanks, Fari.
All right. We stuck.
I think
we're
what
still
he said
green
key
here.
right at the end, and I mean, obviously, the screen shares weren't working, so it was somewhat confusing because the screen shares there. But what was important is like if yields continue to rise, he just said repricing of all assets, and I mean that's what we haven't done. That's what the equity markets are trying to do in certain stocks, but it's trying to reprice. And I mean, we are not priced. Stocks are not priced for 6% long-term interest rates. They are not priced for that, folks. I mean, you always think about the discount rate and what's above the risk-free rate. And when we're at 1%, the risk-free rate, you had preferred stocks yielding you 5.5, Joel, when the risk-free rate was 1. That's a 4.5-point premium to take on the risk. That's now 1.7. So if you want to follow that 4.5 that we had for decades over basically the preferred stocks, if you're going to hold in a 5.5 long-term, preferred rates should be 9. They should be 9 to make up for it, maybe even 10 on a percentage basis. So when we're sitting here at 7, it's such a bad setup. So now we're looking because preferred's priced closer to it's a hybrid, really, is what a preferred stock is. Part bond, part stock, really, because if you go into bankruptcy, preferreds get paid before the equity holders. But it's kind of like a hybrid, is really what it is. But I mean, you just look at that and you just think, okay, and then take it back to the equity markets here. And there's so many stocks that are still trading 25, 26, 28 times earnings. There's no business, really, stocks trading 30 times earnings. In a 6, 7% environment, you got to discount that back. In a 1% environment, it maybe makes sense, but does it make sense to wait? It's because just take it at face value. At 6%, rule of 72, your money doubles every 12 years, right? So if you get to average to 10%, your money doubles every 7 years. I mean, we're paying for 30 years. So if they continue to make money at this rate, some of these consumer staples, 22, 23, 24 times, it takes you 22 years to get your money back. That's twice. That's you're getting half of the return of the risk-free rate. So I mean, assuming there's no growth, and maybe there is going to be growth, but a lot of the consumer staples don't have a hell of a lot of growth. That's why that stuff continues to get hit, and that's why I sell that stuff during the rally. So it's all about rates, folks. TLT matters.
He sounded like Fari was a hesitant bull. He his indicators are doing that, but you could, it was like, I'm in, these are my positions. It just kind of felt like a hesitant bull. And today that's paying off a little bit as we are now in the 43.50 handle. We know there's not much in here the way we chopped around yesterday. A few more earnings reports to get to. I know we're not paying much, but well, let's just rip through these, Mitch. We got some good ones to go through here. Well, how about LRCX?
Lamb Research Q1 EPS $6.85 beats the $6.07 estimate. Sales of $3.48 billion beat the $3.41 billion estimate. They do see Q2 EPS at $7 plus or minus 75 cents versus a $6.79 estimate. Revenues at $3.7 billion plus or minus 300 million versus a $3.65 billion estimate. Lamb Research, of course. I'm wondering if there was anything else in the chip news. Of course, recently we got that news on AI chips, if this would affect kind of Lamb Research. But as you guys can see, it's already starting to climb back.
Yeah, it breached the pair of lows that you had from the last two sessions. So I'll throw out the pre-market chart there, and I'll see what happens if it comes down to 626.40. That splits the lowest in the last two sessions. As always, resistance if you're trading lower, initial resistance will be at that closing price at 42.24.
Head and shoulders on this pattern. We'll see what happens. Blackstone, next one up. Q3 adjusted EPS, 94 cents, missing the 101 estimate. Total segment revenue at 2.32 billion, missed the 2.51 billion estimate. This is going lower in the pre-market. What do you guys think?
The S&P ad was a huge selling opportunity. And again, it took about a week.
Yeah.
Went from 105 to 112 on the S&P ad, then hung out there for about 6-7 days, 115, and then now look at 97. It was just a gift from the S&P. If you're long that thing, that was a selling opportunity. So often when they get added to the S&P, it's just gifts. That was a gift as well.
Off the pre-market low of 95.88, and I like the 95, just one low in that area, 95.18. We'll keep an eye on that. I just kind of look at Morgan from yesterday, and they weren't kind to Morgan, so
Oh my
careful on this
gosh,
one.
were they not kind to Morgan? We didn't even talk about that. Wow, that was a shellacking.
Yep.
80. This is Morgan Stanley, 4.54% dividend. One of the best, like one of the best, obviously brokers out there. Huge client base. I mean, Morgan and Goldman, they're right up there, neck and neck. Goldman, you probably give, say best of breed. Morgan's right there with them. I mean, it's just quietly again, saying, you're at 52-week lows here on Morgan Stanley. You can say there's been a bull market in tech, but there's been a bear market and a lot of other stuff. And this Morgan Stanley has been in a bear market for 2 years here now. We are now off the all-time high, 109 to 74. What is that? 35 points, somewhere in there, 35 points
30%.
on 109. Yeah, you're down 33% from the all-time high in Morgan Stanley. It's significant. It's something to think about here. Is there a date with 60 eventually on this? I mean, I don't know. It's out of the question. I tell you right now, though, any rallies, there's so many people out of water, underwater here. It's hard to just think, 74 is the bottom. It's going back to 100 here by the end of the year. It's hard to think that in this environment. We're just in a different environment, folks.
Nibble at the $72 area. That's a pair of monthly lows back June and July of last year.
Let's do these two together, Alcoa and Steel Dynamics. Why am I going to put them together is because I'm thinking that we're starting to see deflation in the basic materials starting to come into play. Alcoa at a loss of 114 misses the 113 estimate. Sales of 2.6 billion beat the 2.59 billion estimate. Steel Dynamics coming in with an EPS at $3.47 versus a $5.03 prior year. Sales of 4.59 billion beat the 4.55 billion estimate. They did say it was constructive regarding North American steel market dynamics. I think we're starting to see a little deflation come into the market with these. What do you guys think about that?
I mean, cyclical businesses here, money, Mitch. And as much as you're like, oh, Alcoa is trading 6-7 times earnings, how can it go wrong when it's at the top of the cycle? This is how you go wrong, because they're losing $1.14 a quarter here now. Cyclical, not good. Prices have obviously come down, hurting. Aluminum prices have come down, hurting Alcoa here. $26, topped out in 2022 at 98, quietly down 70% from the highs here. Hard to just get all excited when the company's burning cash like it is here right now. You need the economy to turn. And I mean, we've been in a good economy here, and this is falling apart here. So I don't know. Aluminum prices have come down. They need the aluminum prices to stabilize maybe, but wow, I tell you, this has been a fall from grace.
major resistance at 28, if in fact you can get there. Yesterday's high hasn't even come into play yet at 27.43, so we'll be keeping on that. You do have been some. I'll just give you the low of the move if it goes into reverse. That comes in at 25.59 for Alcoa STLD. Been in this one for a while. Sure wish I would have sold it up at the 120, 130 area, but man, yeah, hard to get a constructive chart on this one until you can prove you could take out 110. That is for Steel Dynamics. Just want to look at Axe. I saw it drop 70 cents yesterday, Dennis. You were talking about, where's the deal? Where's the deal? Where's the deal? But now, big hit yesterday.
If I was
with
sitting in
Premarket.
U.S. Steel, I would be ringing the
Cha-ching.
register here.
Yep.
Yeah, taking the money and running because there's problems in this industry here. And you know what? They might just hold out long enough to get no deal at all. And if that happens, I mean, the stock's back at $22 and you're like, oh my gosh, what did I do? Look at Nucor. Nucor is your best one. Nucor is best of breed. Making new, is that new 52-week low? No, it's pretty dang close. No, because it's back in May. But the new like 6-month low here. I mean, there's stuff happening. MT, one of the biggest ones in Europe, just seemingly goes down every single day. So the only reason U.S. Steel does not participate is because everybody thinks it's getting bought out for 40. Well, you know what? As the other steel stocks go down, that buyout price becomes less. So I think, if you do get a buyout, I think you're going to be disappointed. It might be like 35 or 36 only. And if they say, well, the prices weren't good enough, we're just, we're not selling now, the thing's back at 24 and you're like, oh my gosh, why didn't I not take my profits? Bird in the hand. If I was long U.S. Steel, I would sell it as fast as I possibly could because I think there's going to be no deal eventually.
Yeah, interesting that I've been seeing a little bit of those materials go down, gold go up. Will we come into a period like it was after 2000 where gold gets higher on deflation? That's things that I'm just thinking about. Going to you, Joel, what's up with the ES outlook?
We're in an area of limited resistance here. I mean, that's just the way we whipped around yesterday. So really can't give you a good level. I mean, the intraday high from yesterday was way
Joel,
up at the
ES
43.
chart, they can't see it. They can't
I
see
got
what you're
the
talking
MT.
about.
Just a minor level at 57.50. If I potential exit along there, but it's just open, coming back on the downside now. I think if you get near that closing price from yesterday, you'll find support. So we're 30 handles off the pre-market low. Let's see what the Fed heads have to say. And tomorrow, it's the third Friday of the month, right? Options expiration. We'll be bringing on no other than CC Legator to talk about what he's seen in the VIX and the options market. Everyone, thanks for joining us today.
All right, Joel Elconin getting out of here. Dennis Dick out of here, guys. I will let you guys know we have a great event for you guys today. It's our AI Summit, the Benzinga Titan Summit, of course. And we'll be getting into all different areas, autonomous vehicles, fintech, healthcare. Don't miss it today, guys. We got some great speakers from Qualcomm, Verizon, MasterCard, Amazon Web Services. You don't want to miss this, guys. This is going to be at 11 a.m. right here, only on Benzinga, of course. So check that out, guys. 11 a.m. today, our AI Summit. Who's going to be there? Don't miss it. I know I will be excited. I will be interviewing MasterCard and Verizon. Don't miss that later today. Our free virtual event, the AI Summit, starting at 11 a.m. Eastern. Be there. Or be square, how they say all the time. Smash the like also. I hope you guys appreciated today's action right here, of course, on Pre-Market Prep. Now to get you guys over to live trading, that's starting up next.